Hey, what's up my people, welcome back to Option Science channel. Today we are back with one amazing video which is going to be a game changer for you. So in this video I am going to explain you a simple strategy which can be deployed by anybody, no matter whether they are experienced, they are intermediate or even beginner phase to the trading. They can execute this simple strategy and make easy money. So when I say it is simple strategy, what I mean to say is that this strategy doesn't require any analysis or any indicators to be used or any technical knowledge or those kind of things, whether OI analysis or option Greeks or nothing is required for working out this strategy. This strategy revolves around simple understanding and fundamental concept of risk and reward management. Okay, so the basic funda is that whenever you take a trade, you never lose 1% of your capital in any particular trade, and that has to be strictly followed. If that can be strictly followed, I'm assuring you, you can make money using this strategy. So let's get into the few basics and rules of this strategy, and then we'll analyze it with the charts for the previous days. So if you take few rules of this strategy, you can just make a note of it. So in this strategy, what we are going to do is we are going to take a fixed candle at a particular time. So it can be 9:15 candle or 9:20 candle or 10 a.m. candle or even 12:30 candle, any particular time in a 5-minute chart. You have to take a particular candle. Okay, so I'm going to stick with 10 a.m. candles. So this will be 10 a.m. candle in a 5-minute chart of any of the instrument, be it Nifty or Bank Nifty. So let's say this is the candle. What you have to do is at 10 a.m. So for example, I have taken 10 a.m. At 10 a.m. you're going to mark the high and low of the particular candle. Okay, at 10 a.m. you're going to mark high and low of this particular candle. Okay, so whichever direction the next candle goes, suppose if the next candle is crossing the high, then you have to enter the trade here and your stop loss will be this point. Suppose if it is the reverse, next candle, suppose it is crossing the low of the 10 a.m. candle, you have to enter here and your stop loss will be this level. Okay, so this is the basic fundamental rule. So whenever you enter a trade, you make sure that your stop loss is under the 1% risk defined for any particular trade, and if the stop loss is more than your 1% risk, then you adjust the position size accordingly, and if you cannot adjust the position size accordingly, then you just don't enter that particular trade. Okay, so simple thing, select a particular time candle in 5-minute chart and enter based on whichever side the next candle is crossing. So the rules for taking the stop loss is that if suppose this is your stop loss level and any candle at any particular time closes below this point, so the candle closure has to be completed below this point, then you have to exit by taking your stop loss. Okay, so two more things which are important is that you have to move your stop loss to cost whenever 1:1 is achieved. Okay, so whenever 1:1 target is achieved, just move your stop loss to the entry price, so that if any retracement happens, you will exit without profit or without loss, which is a good scenario. So not losing any money is also a good trade. Okay, and always you have to book your profits minimum at 1:2. Okay, if you want to trail for higher targets, you can book maybe 50% at 1:2 and trail the next 50% for higher targets. Okay, so why this strategy is very effective is that at any point of the time, let's say at 10 a.m. every day, suppose market is at this level, it is highly improbable that market will stay in this level for the entire duration of the day. It is highly probable that market will either move up or move down. This is the case with any fixed time frame. You take 12 p.m. candles every day. If you take 12 p.m. candles, it is highly probable that market will stay at the same range for the entire duration of the day. So why I am taking 10 a.m. is that it's much earlier in the day, and it is highly improbable that at 10 a.m. wherever the market is, it is going to stay at that range for the entire duration. Yes, it can happen one day or two, but it is highly probable to make an up move or down move, and this is where we are trying to capture the profits. Okay, so let's go to the charts and see how the strategy will perform. So for a few of the days I have marked the high and low of 10 a.m. candles, and let's see how the strategy has performed. Okay, so if you see, this is today's chart, and this particular candle is the 10 a.m. candle. I have marked the high and low of it. So you can see that this particular candle has crossed the high of the 10 a.m. candle, and we will enter the trade here, and our stop loss is in this level. Okay, so this is the stop loss, lower level. Now you can see that after entering, market has given a continuous up move. Okay, it is more than 1:5. Your target is more than 1:5. So what you do, you book your profits at 1:2. 1:2, you book your profits 50%, and 50% you keep trailing. So you have made good profits using this strategy for this day. Let's see for the previous days. So if you see, this is the strategy setup for previous day. At 10 a.m. I have marked the high and low, and as you can see, next candle has crossed the high of 10 a.m. candle. So we have entered there, and it has given 1:1. Okay, it has given up to 1:1. So as per the rule, when it comes to 1:1, you have to move your stop loss to the cost, and when it retraced, it will enter at no profit, no loss. So this trade, you didn't have any profits, neither did you have any loss. Okay, let's go to other day. Okay, now this was day before yesterday. I have marked the 10 a.m. candle high and low. As you can see, the market has crossed the low of 10 a.m. candle, and you enter here. Market has crossed the low of this 10 a.m. candle, and you enter here. Now your stop loss is at upper level. You can see that stop loss is never hit, and it has given a very good downward momentum. So you can book your profits at 1:2, and 50% you can trail for higher targets. Let's go to other days. One more day we'll see. I have marked the high and low of the candle. Here in this case, it has crossed the low. We will enter the trade here. It has crossed the low. We will enter the trade here, and it has hit our stop loss in the next few candles. So here if you see, the only time when the SL is hit, the SL is of very limited points, but whenever you are getting target, it is either 1:2 or more. Whenever the target is achieved, it is high target. So why this strategy is simple is that you don't need to do much of the analysis. You don't need any OA data. You don't need any Greeks fundamentals and indicators to put into use for your trades. Just simply draw the high and low of 10 a.m. candles in your charts, and whichever direction the candle is breaking, take a trade in that direction and keep a small stop loss. Now the point is, even frequently if your stop loss is getting hit, it will be of very small amount, but whenever you are achieving targets, as like you can see, it will be 1:2 minimum, and 50% you can trail for more and more target. Now why this strategy is very effective is that at no point market is going to stay at 10 a.m. levels till 3 p.m. Yes, it can happen very rarely, but more probably it is bound to give a good up move or good down move, and either of the case you can enter a trade and make a profit. Remember, if your stop loss is getting hit, it is getting hit only for the small size of the candle, which is at 10 a.m. Suppose if your 10 a.m. candle is very huge and very big, you don't enter the trade for that particular day. So you keep repeating the same thing. You keep repeating entering at 10 a.m. candle high or low, whichever it breaks. So you keep repeating the same thing for months and months. You will see amazing profits. I'm telling you, the only thing you need to manage is the risk to reward. 1:1 is achieved, you move your stop loss to the cost and exit out of the trade if it is retracing. Otherwise, you book your targets at 1:2, or you can trail more and more if required. So that's it, guys. Very simple strategy. I personally have put this into use many times when when it gets very complicated that other things are not working. or continuously if I'm hitting some losses or anything, I'll go for simple strategies like this, and which has helped me gain back my confidence by coming into profits. This is one very simple effective method, very simple strategy to become profitable and start earning money today onwards. So I hope you will have something valuable to take from this video, and do let me know if any doubts are there in the comments below. Always happy to help. Thank you and have a nice day.